Bitcoin has done it again. A new all-time high, over $125,000 per coin. The number itself is shocking, but what's truly fascinating is what it represents. Because this isn't just another crypto rally or a wave of retail excitement. This time, it feels different, quieter, more calculated, and far more powerful. Something is shifting behind the scenes of global finance, and Bitcoin, once the rebel, is now at the center of the system it tried to escape. Think back to 2009. The world was reeling from a financial collapse. Banks were being bailed out, trust in governments was fading, and one anonymous figure, Satoshi Nakamoto, released a white paper that would spark a movement. Bitcoin wasn't just code, it was a statement. A new kind of money, born from chaos, built on mathematics and freedom. For years it was dismissed as a toy for hackers and dreamers. But every crisis since then, every debt bubble, every currency failure, has made Bitcoin's message louder. Fast forward to today, and the story couldn't be more different. Bitcoin has gone from being a digital experiment to a trillion-dollar asset class. And the people buying now aren't just enthusiasts. They're the institutions that once mocked it. BlackRock, Fidelity, Morgan Stanley, the pillars of traditional finance are all in. Their Bitcoin ETFs are smashing records, and behind those flows lie pension funds, endowments, and sovereign wealth money, the kind of capital that doesn't trade, it positions. It's almost poetic, isn't it? The same Wall Street giants that once called Bitcoin a scam are now helping it break records. What used to be a symbol of rebellion is turning into a global reserve asset. Governments that once threatened to ban it are now exploring how to tax it. Even central banks, once its loudest critics, are studying how Bitcoin might help them hedge against inflation and currency risk. The revolution didn't happen with protests or riots. It happened with spreadsheets, ETFs, and institutional approval. So why now? Why did Bitcoin surge past $125,000? Three invisible forces are driving this new rally. First, inflation fatigue. The world's major economies have printed trillions over the past 5 years. People are losing faith in fiat money. The dollar, the euro, even the yen, all are weaker in real terms. Bitcoin, in contrast, is finite. Second, the halving. Every 4 years, Bitcoin's new supply is cut in half. This year was one of those moments, and it reignited scarcity. And third, geopolitical tension. From wars to elections to debt crises, instability drives capital toward assets that exist outside political reach. Bitcoin thrives when the world feels uncertain. But here's the secret few people talk about. This rally wasn't driven by hype. There were no Elon Musk tweets, no overnight influencers, no celebrity endorsements. The demand this time came quietly from corporate treasuries and family offices, from sovereign funds hedging risk, and from nations experimenting with Bitcoin as a store of value. This isn't noise, it's coordination, a slow, deliberate move toward a parallel financial reality. And while the money flows in, the technology behind Bitcoin has transformed. The Lightning Network now allows instant microtransactions, fast enough for everyday purchases and scalable enough for global trade. Energy efficiency has improved dramatically, with miners shifting to renewable power sources, hydropower, geothermal, solar, and even volcanic energy in El Salvador. Bitcoin is no longer just a speculative asset. It's becoming infrastructure, a silent network of value operating 24/7 beyond borders and governments. But the real engine of Bitcoin's power has always been scarcity. Only 21 million Bitcoins will ever exist. More than 19.6 million are already mined. That means fewer than 1.4 million remain ever. And every day, the float gets smaller. Coins are locked in vaults, cold wallets, and institutional reserves, removed from circulation for good. On most major exchanges, Bitcoin's available supply has hit record lows. The result? Relentless upward pressure. It's not speculation, it's simple economics. Still, every great surge casts a shadow. Regulators are nervous, governments are watching. The United States, the European Union, and China are all racing to launch their own central bank digital currencies, digital dollars and euros designed to compete with Bitcoin's independence. They promise efficiency, but come with surveillance and control. Because Bitcoin doesn't ask permission. It exists outside authority, and that, for governments, is terrifying. Behind closed doors, the debate is intensifying. Should Bitcoin be embraced, regulated, or contained? Some nations see opportunity, others see threat. In places like El Salvador, it's legal tender. In others, like China, it's banned entirely. But banning Bitcoin is like banning the internet. It can't be done. Every attempt only makes it stronger. Every crackdown pushes innovation further underground, where it becomes unstoppable. But let's not pretend Bitcoin is perfect. Volatility remains. Price swings of 20% in a week are still possible. Hacks, scams, and manipulation exist on the fringes, and every cycle attracts new speculators hoping to get rich overnight. Yet, underneath the chaos, one truth stands firm. Bitcoin's network has never been hacked, never been controlled, and never been shut down. In a world built on trust and often betrayal, Bitcoin's code has kept its promise. The irony is that what started as a tool of resistance is now becoming a tool of preservation. Wealth managers are using it as a hedge. Billionaires are using it to protect legacy. Emerging markets are using it to escape hyperinflation. For millions, Bitcoin isn't an investment, it's survival. It's the bridge between a broken financial system and a digital one that doesn't discriminate. And that might be the most powerful part of its story. When you strip away the hype, Bitcoin is really about trust. Not trust in banks or governments, but in code, in mathematics, in human ingenuity. It represents a shift from centralized control to decentralized accountability. Every block, every transaction, every confirmation, a piece of digital truth written permanently into history. It's money that can't lie, can't be printed, can't be erased. So, what does $125,000 Bitcoin really mean? It's not just a number. It's a signal that people, institutions, and even nations are waking up to a new kind of power. It means the conversation has changed from, "Is Bitcoin real?" to, "Can we afford not to own it?" It means that somewhere behind the scenes, the balance of financial power is tilting, away from paper and politics, and toward algorithms and scarcity. And as this transformation unfolds, one thing becomes clear. This isn't the end of Bitcoin's story. It's the beginning of a new chapter, one where digital money becomes the standard, not the exception. The road ahead won't be smooth. There will be crashes, regulations, and political wars, but the direction is set. The idea can't be uninvented, because behind every surge, every correction, and every billionaire quietly buying in, there's something bigger at play, a global awakening to the future of value. Bitcoin has evolved from rebellion to recognition, from chaos to structure, from myth to mechanism. And as it crosses $125,000, the message is loud and clear. Money will never be the same again. This is Behind the Billion.